The stock market shook off earlier losses and yet again rallied to new highs Wednesday, after the Federal Reserve said the economy was strong enough for the central bank to begin reducing the historic level of stimulus it has been providing markets since the COVID-19 pandemic began. Despite the Fed's assurance that it's transitory, inflation fears have risen in the past few weeks, with the market already pricing in several rate hikes for early 2022. Investors could also get spooked if the pace at which the Fed tapers its bond purchases changes. We are prepared to adjust the pace of purchases if warranted by changes in the economic outlook, Powell said in his press conference. Markets have remained calm after the Fed announcement, which highlights how well the Fed telegraphed the decision to taper, says Cliff Hodge, chief investment. The Fed meeting went as planned, agrees Oanda senior market analyst Edward Moya. With Fed Chair Powell sticking to the argument that inflation is transitory, pricing pressure should ease during the second or third quarter and stocks will continue to add to records, he adds. The Federal Reserve has held interest rates at zero since the coronavirus pandemic roiled the U.S. economy in March 2020. Although the central bank said the economy was recovering well, several obstacles remain, including labor shortages, supply chain constraints and higher costs. That hasn't stopped the stock market from hitting fresh highs. The S&P 500 rose over 5% in October for its best month so far this year. Third quarter corporate earnings have proved resilient despite ongoing investor concerns about the economic recovery. Of the 362 companies in the S&P 500 that have reported results so far, 81% have beaten expectations, according to Refinitiv. Federal Reserve scales back pandemic stimulus, will end by June, Forbes.